welcome everybody. Good morning. I hope you had so far a very good MIPIM. We're very glad to have the sun for this fourth day of MIPIM so far. I'm very glad to introduce this year a new summit, the Data Center Summit. And I would like to tell you a bit of the story behind this, because for years, this was a bit of the elephant in the room at MIPIM. It was maybe seen as a purely industrial infrastructure for years, maybe a bit distant from the real estate market. But with the acceleration of AI, especially since, I would say, 2 years ago, it was on everybody's lips, on every conversations at MIPIM, but there was no dedicated conference and networking zone, so no the right experts in the room. I think we're missing a bit, so it was an obvious decision this year to create that Data Center Summit. And thank you for your presence, very strong presence. On Tuesday, we had the first part of that summit. Actually, the room was packed, 350 people in the very small room. Actually, that's the lessons learned for next year. We maybe take the Grand Auditorium from data center. But that's a sign also of the interest in the market. And on Tuesday, we talked about power, land, and capital. So, of course, the power is a critical aspect of the building of data centers. Location, as we say in our industry, it's more than ever an important aspect for data centers, and capital and all the risks associated with investment. So it was a very insightful, passionate discussion on Tuesday. And today we are together to talk about 3 other subjects: design and all the issues and questions about the obsolescence and the pace of technology associated to AI, the question of cooling, the question of sustainability. We are going to talk about construction and the cost of construction, also the issues of supply chain maybe in a world that is still uncertain in terms of inflation. And we are also going to talk about finance and all the questions about setups and governance of projects. So it's going to be absolutely amazing time. And to support that session, I'm very proud to tell you that Arcadis, the global firm for consultancy, engineering, and architecture, is sponsoring that session. Thank you to Arcadis for that, and have a wonderful and passionate discussion about data center this morning. Thank you.
Thank you, Nicolas. So we will start as we mean to go on. Just very quickly, my name's Vanessa Moffat. I represent the Data Center Alliance, which is a trade association for data centers in the UK. We are now going to have a nice live poll, so get your phones at the ready. We have QR codes for you and some questions. Could we please have the first question? Were you here on Tuesday, essentially? So if you scan I'm in the way. It's over there as well. It's on that one as well, so you can scan it over there. Let's have lots of answers to all these questions. I can see how many people are actually answering the question up there. Wow, 50-50. Can you all get the QR code at the back? Yep, there's another screen over there. Perfect. That's great. It's still 50-50, which is great. We're in slightly different topics today. So those of you who were here on Tuesday, we will be covering different topics today. Excellent. So should we move on to the next question? Get out the way. See who we've got in the room. A lot of consultants. Brilliant, thank you. That's slowing down, I think. Next question, please. Which region do you primarily invest or operate in? How many questions do we have, Jessica? 5. Okay. Won't go on forever, don't worry. It's a good mix. Next question is, are we at risk of overbuilding AI data center capacity? Get out of the way. Too early to tell, that's very interesting. Some of us on the table did not predict this answer, so that's very interesting. Lovely. And the last question, please. What is the biggest delivery risk for AI infrastructure today? Yeah, that was clear, I think. Brilliant. One more question, actually, one more. And then I will hand over to Christian. Okay, last question. Where do you think the bubble will show up first? Or is it already here? Oh, we've got lots to talk about today, haven't we? Okay, so if you've got that QR code, you can keep answering. But in the meantime, I'm going to introduce Christian Goldsmith, who's from Arcadis. He is the Data Center Global Solutions Lead, and he is delivering a keynote now for you. So over to you, Christian.
Thank you, Vanessa. Good morning, all. I really want to say what a pleasure it is to see so many people turn up. I was concerned perhaps I was going to be talking to a quiet room, but perhaps I should have realised that with all the interest in data centres that there'd be many, many of you here today. Can we push on to the slide presentation? Forgive me, I'm going to need to read my notes. Thank you. Okay. So, scale is the defining force transforming the data center market today. Hyperscale and AI workloads are driving demand and complexity at a pace unlike any other real estate sector. This scale is both an opportunity and a challenge, and it's rewriting how we're thinking about specification, delivery, and capital allocation. So I'm going to explore these challenges and that you as property and investment professionals need to master if you're going to succeed in this dynamic market. So we can frame this impact of scale in these 3 interconnected challenges: specification, delivery, and capital. Each demands new thinking and new approaches. So over the next few minutes, I'll walk through these pillars and illustrate what's changing and why it matters to investment and development professionals. So starting with specification challenges, data center technology is evolving at breathtaking pace. Rack power densities have increased tenfold in less than a decade, driven largely by AI and hyperscale cloud workloads. This rapid evolution means assets can become obsolete faster than traditional real estate cycles, creating a real risk of stranded assets if we don't design for flexibility. Investors and developers must recognise what worked 5 years ago might not suffice for tomorrow. So adaptability is not optional, it's essential. So we've found that 80% of data centre operators expect major refits or retrofits in the next 5 years following launch. So how would you in your property portfolio handle a complete technical refit out every 5 years? Hyperscalers push the frontier with first-of-a-kind solutions, liquid cooling, bespoke power plants, new layouts tailored for AI compute. These innovations require early collaboration with suppliers and partners. A copy and paste approach simply won't work. Design and procurement strategies must be agile and co-created, allowing us to build what's never been built before on schedule and on budget. We found that 60% of new hyperscale builds are now using non-traditional cooling and power solutions. Are your delivery models ready to deliver what's never been built before? Unlike offices or logistics, much of the data center's value lies in the technical fit-outs and the power infrastructure. These depreciate over 5 to 10 years, far faster than the building shell. This means that capital expenditure cycles are more frequent and must be proactively planned for. Understanding and modelling these divergent asset life cycles is critical to preserving returns and avoiding surprises down the line. We found that 70% of the total data centre investment might be in this category of rapidly depreciating assets. So how do you structure your capital to match the different life cycles of parts of your build? So let's move on to the delivery challenges. Hyperscale clients operate with a risk-on mentality, prioritising speed and agility over the traditional risk aversion of the real estate industry. Delays don't just cost rent, they cost market share and competitive advantage. A recent report estimated that data centre delays can cost developers around $15 million a month. So our delivery models must therefore enable rapid mobilisation, parallel work streams, and fast interaction whilst managing the complexity. Can your teams deliver at this hyperscale speed? As powered land becomes scarce, data centres are moving into frontier locations, markets with immature supply chains, regulatory complexity, and longer permitting timelines. This creates new challenges, but also first mover advantages for those who engage with these early with the utilities, the regulators, and the vendors. Managing supply chain risks requires innovation in procurement and partnerships tailored to these emerging hubs. We found the impact of delivering a first-of-a-kind data centre in a frontier market can add 20 to 30% to the timeline of delivery, and we've seen how important speed to market is. The question is, where are these future hubs, of course, and are we positioned to, are you positioned to get there first? Integrated delivery. There we are. Integrated delivery of power, water, and connectivity from day one is now mission critical. Securing powered land, sites with ready access to critical utilities, can make or break a data centre project. Treating infrastructure as a strategic asset, not an afterthought, reduces cost delays and stranded investments. So are you treating your utilities as an afterthought, or are they a primary strategic asset? So then thirdly, let's look at the capital challenge. The AI boom is triggering a bull market across chips, energy, and developable land, driving up costs and intensifying competition. Early movers who secure capacity and supply chain advantages stand to reap outsized returns. But the market volatility demands sophisticated risk management and scenario planning. There are various studies, but they all pretty much predict that the global data center market forecast is to exceed $1 trillion by 2030, with a compound annual growth rates of between 12 and 20%. So are you ready to compete in the most dynamic market in the real estate industry for a decade? As we've seen, the capital allocation must account for 3 overlapping asset cycles: the long-lived shell, the faster depreciating fit-outs, and power infrastructure. Ignoring these divergent life cycles risks misaligning leases, refinancing issues, and eroding yields. Investors need to model these cycles distinctly and plan for scheduled mid-life upgrades as a standard practice. How are you modeling your asset life cycles? AI tenants offer strong covenant potential, but often demand flexibility and shorter lease terms due to the rapid technology change. Lease structures, upgrade obligations, and term expectations must evolve to capture the upside while protecting investor returns. Understanding which side of the AI-driven covenant equation your portfolio sits on is fundamental to future success. So in summary, scale changes everything. It transforms specifications, delivery models, and capital strategies. The hyperscale-driven data center market is dynamic and fast-moving. For investors and developers who adapt, the opportunities are clearly significant. For those who don't, the risk grows daily. So I'll leave you with this. Scale changes everything. The question is, where will you play? Thank you.
Thank you, Christian. We absolutely live in fascinating times. Now, we're going to try and keep this as interactive as possible. We have a mixture of sessions planned for you now. If you would like to ask questions, we have a QR code here, and we will have them kind of going on in the background. So we're going to introduce a panel session next. As I say, scan the QR code, keep Slido open, and ask your questions as you go. We'll come to them at the end of the panel session. And then we'll have breakout sessions after that, which I'll explain later. So we have team leaders, but we're going to have breakout sessions. You're all invited to those, so you'll gather around the tables and have discussions around various countries. So I'd like to invite the panelists up now for the next session, please. This panel is called Designing, Building and Financing AI-Ready Infrastructure. So we'll cover some of the topics that were in the poll just now. Okay, thank you. I'd like to ask you all to introduce yourselves first. Christian, would you like to go first, and then we'll come along the line?
Hello. Hello, yes. Yes, well, you've heard from me already. Christian Goldsmith, Global Data Center Solution Lead at Arcadis.
Bonjour, good morning. Fabrice Coquillot, I'm the Managing Director of Digital Realty in France for 26 years, the world leader in terms of data centers, 320 data centers plus in the world, #1 in Europe, #1 in France.
Hi, I'm Francesco Cecchin, I'm a portfolio manager at Finco.
Stephanie Taylor, good morning everyone. I'm the Executive Vice President for QTS.
Hi everyone, I'm Andre Karahalu. I'm co-founding partner of Digital Gravity. We're a mid-market digital infrastructure investor.
Thank you all. So I'm going to kick you off with a warm-up question. And that is, when you hear AI-ready infrastructure, what does it actually mean in your world today? Because I think it means different things to different people. So I'll start with you, Andre.
So for us, I mean, we differentiate between AI training and inference, obviously. So AI ready means it's got to be future-proofed in terms of floor loading and cooling capability to be able to deliver some of the densities. So, you know, NVIDIA is already talking about gigawatt racks over the next couple of years. So being capable of delivering the infrastructure that can support those future workloads is key. Obviously, inference is going to lag that by about 5 years, but that's what I mean when I talk about AI ready.
I recognize a lot of that. I think if I had to think about priorities, it would be powered at scale, easier said than done. High density, liquid cooled, ready design. And then I would add campus flexibility. In our experience, when you go and apply for planning for large scale campuses, you've got to figure out what that could look like in 2, 3, 5, 10 years. So the flexibility in that planning phase is quite key for AI-ready infrastructure in the way you can develop the campus, but also how can you enable a mix of AI, cloud, and hybrid workloads, I would say.
I have to agree with Stephanie. I think flexibility is probably, as an investor, the key parameter that we look at. And so the size and the location of the campus is determinant, because you will build certain campus over a decade, and a lot will change over that period, and you need to be able to adapt through time.
So I can only echo what was said. Christian pointed out all the changes in terms of flexibility, readiness, changes in technologies to cooling, for cooling particularly. However, well, to me, the AI ready is the main question is maybe when. When? Because we are just at the beginning of a very long journey. Just take a very quick comparison. Of course, AI is not the same as cloud, but at Digital Realty, we started deploying cloud platforms in 2012, 14 years ago. And today, if we take only the example of the large French corporates, the kind of cloudification of their IT is close to 25%. So 14 years later. So what is going to be the exact adoption level and speed of AI? That's the big question. More than flexibility pay, maybe.
We'll wait to find out.
Flexibility is a consequence, not the cause.
Okay, Christian.
Some good points. I think sometimes the phrase AI ready is a mismarketing. Just putting some GPUs in a legacy data center doesn't mean it's AI ready. So for all the reasons we spoke about, the need for flexibility, additional power, more cooling, and so on. From a design and engineering point of view, what we've found is that we're designing now for high dense compute of 50, 100, 130 kilowatts per rack, but actually the build itself has the capacity to go to 500 or 600 kilowatts per rack, and we're designing that now, knowing that it's coming in the future. So I think flexibility from our point of view, once you work out when, is the number one concern for our clients.
Okay, so flexibility all the way through the stack. I remember when the term cloud came out and nobody knew what that meant. I'm not sure that's a good term now, to be fair. So, Christian, staying with you, are we seeing genuine structural demand for AI yet?
Yes. Yes and no. So there is some speculative stuff. There's some structural demand. I think the structural demand is coming through the need for inference and deployment of models. We know that is coming. That's creating a change in the market over the next few years. I'm pretty much we're going to see that. There's only so many AI factories, effectively, that we need. And as we move into a place where as yet, we don't know what the application of AI really is. We're only scratching the surface. We are going to need some latency-dependent inference of those models. But there is also a lot of speculation. There's a lot of capital chasing this capacity. And I think that's where people are scared and they're thinking it's a bubble. I think there's going to be some blips along the way, and I think some people are going to get their fingers burnt. But, it's a high-risk, high-reward market.
Yeah, absolutely agree with that. And Andre, from your perspective, are you seeing any misunderstandings in the market that might be leading to this bubble?
It's provocative again, bubble. So, I think the misunderstanding is a lot of the time when people talk about AI, they think we're talking about AI training, which is obviously consumed the headlines for the past 3 or 4 years, and there's an inflection point coming. By 2027, inference is going to overtake training as the major component of AI. So from our perspective, as we look to our investments going forward, it's less oriented towards training and more oriented towards inference and building out the capability for inference workloads. Now, what we've noticed when we look around the European market is there's a deficiency at the edge, close to end users, to be able to deliver those inference workloads going forward. So what we're doing is, in partnership with BlackRock, we've got a JV to roll up and retrofit existing legacy data centers that are at the edge. Again, with that, as Christian was saying, with an eye on, on that inference explosion that's going to be coming over the next few years. Inference, to anyone who doesn't know, is effectively the training is when you build the GPT 5.3, and the inference is when you use ChatGPT to chat with that model, and it's much more energy intensive than the actual initial training run as well. But yeah, that's how we look at it.
Thank you. And so you were talking about retrofitting, but how are you designing now to avoid the data centers being technically obsolete in 5-10 years?
Yeah, it's what I said in the preamble as well. We make sure that the floor loading is capable. So right now, for a standard co-location data center, it's sort of the floor loading is around 500 to 800 kilograms per square meter. But going forward, the current NVIDIA racks are around 1,500 kilos per square meter. And then looking forward a few years, so we're making sure that we're capable of delivering 3,000 kilos per square meter, just in case some of these extra large coolant distribution units turn up in 5 years' time. But it's also, in terms of future-proofing, we need to make sure that any long lead items, so for example, transformers, which currently, some transformers have got 4-year lead cycles, making sure that you've got just everything in place so that should we're going to talk about, and Christian mentioned it as well, technological obsolescence. Should some significantly different kit come out in a couple of years' time, like the 1 gigawatt rack from NVIDIA, that you can switch out, and something as simple as currently pipes are designed to about 150 millimeters for water flowing around the data center. Is that going to be sufficient going forward? So those are the sorts of things that we're reviewing.
Yeah, so NVIDIA is really challenging the market. In fact, we're designing data centers around the chips now, aren't we? So it's changing. Does anybody else want to come in on the future-proofing data centers aspects, over-engineering, Stephanie?
Yes, I can think of a couple of examples of the over-engineering. I think top of mind would be a deliberate or intentional over-provisioning for cooling capacity, because at the moment, the way that we design our data halls or white space is predominantly to serve air-cooled customers, but liquid-cool as well, which would require less space, but at the moment, we are leaning in and perhaps over-engineering to allow for both. Mm-hmm. Second, really close to my heart, having a sustainability background, backup generators. I really hope we're going to move to a reality where we can do without. There are some steps in the right direction, but as QTS, we are still allowing and enabling, or at least allocating space for a full backup generation solution. That would be top of mind on my side, for sure.
Excellent. Okay, I'm going to put Fabrice on the spot now. Are you seeing that trend as well with the generators?
With the retrofit, you mean?
The generators, as in moving towards not having them.
Yeah, but maybe not just to repeat what was said, which I agree upon, by the way. I think there is, in terms of all the flexibility, the changes in technologies, and there is one thing that we need to consider is the demand side, not only the offer side. Building a data center, at the moment, finance is not really the issue for the moment. Maybe with higher interest rates in the future, that's going to be a bit different, but for the time being, that's okay. So the real problem is how do you make the returns with such massive investments according to the demand? And this market now is a very mature market. And there are still some particularities. One, in terms of AI demand, you've got a group, let's say, of 20 customers worldwide, 17 Americans, 3 Chinese, representing more than 80% of the demand. That's a small group. Okay. You've got a new category of players that we call neo-clouds, and that's not that clear. Some of them do training, things like that, and so on.
Do you want to just explain neo-clouds?
New players, in a way, deploying. They are coming from the world of mining, the world of GPU as a service, delivering new concepts and new training solutions for new inferences. They are quite different from the one to the other. They are most of the time well-funded, but are they going to exist in the next 2 years? That's a big question mark. And then you've got the vast majority of the enterprises, the people at the end pay for the services of AI.
Yep.
And they are far from having started really the journey that I was describing before. So that's the reason why, as we speak, to us, the landscape is very uncertain. And you have to make some big bets in terms of where to deploy the data centers, when to get them ready, what level of flexibility. Are you going to chase only a single tenant or many customers? I'm in this industry, as I said, for a long, long time. I can say that it's maybe the first time ever that I'm asking myself a lot of questions almost every day regarding this. So it's work in progress, let's say.
Understand. Let's say there seems to be quite a lot of risk involved in this sector at the moment. So, Stephanie, how are your clients or your company, how are you mitigating risk?
Something that has worked well so far, and QTS has over 20 years experience, mainly in the US. We're relatively new in Europe. But one thing that has paid dividend is you have a design that flex for air and cold, but it is pretty standard design that gives you a level of certainty on cost and schedule.
Not anymore.
This is still recognized in part by some of our clients in the US and also in Europe. I think that flexibility needs to stay, that we've already discussed on error. But we're not going to have 15 different type of designs. That is a choice that we have made that is at the moment paying off, but it could well change. Absolutely.
Andre?
I was just say, I mean, air cooling really only works up to, I mean, a year ago they said 50 kilowatts a rack, but I just heard about an 85 kilowatt per rack air-cooled facility in the UK. And it's actually unsafe for humans to walk into the room because the fans are so intensively low.
Yep.
And on Fabrice's NeoCloud point, so the NeoClouds, it's a very interesting case study. So, I mean, yes, they evolved from Bitcoin miners and effectively operators that had powered land that weren't necessarily for colocation or hyperscale use. But NVIDIA made a very conscious decision, and exactly to Fabrice's point, they didn't want to have two customers globally for their kit. They wanted, and so they deliberately encouraged the NeoClouds, and we've seen all of the back-to-backs with NVIDIA. They've encouraged the growth of this completely new market with the CoreWeave, Lambda, Nebius, Vultr, and N-Scale, and so that they have an abundant number of off-takers. But the result of that is that all of the hyperscalers have back-to-back, so the operators proxies for some of those. So they can't get GPUs from NVIDIA, so they get GPUs from N-Scale, as an example, or Microsoft's $18 billion order with Nebius. But how long that persists until the hyperscalers are cost competitive, or until NVIDIA decide that they don't want to support that industry anymore, that's a big risk.
Interesting. And Francesco, what risks are you seeing, and how PIMCO managing risks in this uncertain market?
It's for us. It's a very nuanced approach in the sense that it's very dependent on the ultimate customer, the list that is underlying it, and the location in this case of the various data centers. Because as Fabrice mentioned, there is plenty of capital available at the moment, but there is also a lot of underlying risks that you need to factor in. And similar, it's being this real estate, ultimately, you will need to, and as it was mentioned before, location is going to become fundamental. What's your credit quality underlying it? And what is the terms that you have with your credit? So it's a lot of work and a lot of real estate in a good way, I guess.
Mm-hmm. Thank you. I think years ago when we were designing data centers, Fabrice, we worked together a while back. It was a fairly homogeneous design, but now you need to know how to sell it in order to design it. So, Christian, how is that manifesting itself now?
Well, I think, as I outlined in my speech earlier, I think that you've got so many different work streams all happening at the same time, and needing to know what the compute is, what the chips are that are actually going into the data center before you can effectively really finish the design of that data center is very difficult. And that throws in the challenge as well with funding, because until you've got that lease signed up, you're not going to get the funding decision, but until the lease is signed up, you don't know what you're designing. So what do you need funding? You're constantly going around this loop, which is really, really complex.
So it's a lot of work up front. Fabrice?
Maybe one thing which I believe is quite important, because during your presentation you mentioned that indeed we might enter into a world where we would need to retrofit every 4, 5, 6 years, whatever, part of the data center, or most of the data center. Of course, there is a capital need behind this, but there is another aspect that we have not mentioned, is that as soon as you change the specifications of a data center globally in terms of the thermal power, in terms of some elements of all the permits, you have to reapply for a permit. Mm-hmm. It's not only about money. It's also that you re-enter into a new process of readapting completely what has been declared to the authorities, whether that's in Italy, in France, in the UK, makes no difference. That's the same everywhere. So this is something that if you would have to wait for not one month, but maybe another year again before being able to reapply for that, before re-entering into the process of doing the works, then your data center remains standing still for nothing. With no revenue. So the real problem are the returns here. Mm-hmm. The model, as you mentioned, the model so far for the last 25 years was quite basic. Customers were staying in our data centers for 20 years and plus, calculating the returns as soon as you had good customers, as you said, with good credit checks, that was okay. Quite clear, quite easy. That's the reason why the business was able to deliver high level of margins and EBITDA. Today, there is a major risk here. The concept is totally changing in terms of calculating the returns.
Yeah, understand. Christian?
Yeah, absolutely, completely agree. And the challenge of then going back through that permitting process is that by the time you get through it, the technology's moved on again already. So you're in danger of putting in chips that are already depreciated if you can't deploy them quick enough. So getting around that with different ways of having flexible use within your space, hybrid solutions, modularization, temporary setups whilst you go through processes. There are many different strategies to come at this, but it is a real challenge, just the pace of the technology change.
If I may add just a comment, you made me think of something. When you've got design specification and lease conversations, right? You're going to start a conversation, you have a base build, and then you get to that lease signature. And there is an RFS associated with that, a ready for service, which is what matters most to the client. In our experience, unless those specifications come at lease signature, RFS pushes. And then that is a whole other world of penalties and so on and so forth. And time to market at the moment is all that matter. So, yeah, just wanted to add that point.
Yeah, absolutely. Time to market and permitting. Go for
Can
it.
I add, just to add to Fabrice's point about returns and IRRs? So when we talk about locations across Europe, obviously the returns vary because there's a more pronounced terminal value. So when we're modelling these things out, if you've got a hyperscale off-taker for 15 years, at the end of that, there's a good likelihood that you will have a hyperscale off-taker for another 15 years after that. If you build in a tier 3, tier 4 location, north of Tromsø or wherever in Norway, which are fantastic locations in terms of hydropower, in terms of free cooling, when we model it out, you have to assume a terminal value of effectively zero. We call it the ice rink terminal value. So although it's $1 million a megawatt, but that's an expensive ice rink. But so right across Europe, it's very, very differentiated in terms of reuse value.
So going back to the permitting, I wonder whether that's a topic for some of the roundtables later, because it's obviously different in different countries. In the UK, one of the things I'm noticing is you go for permitting. Obviously, we don't have a use class for data centres because that would be obvious. And they say, have you got power? Then you go for power and they say, have you got your permits? And so you've got a bit of a chicken and egg situation. So I'm just coming onto the constraints. What constraints are you seeing within the market? Francesco, if I start with you, whichever country you feel comfortable with.
I think I can speak about Italy, obviously. I think in Italy, there is a separation between power and permits. They're both a problem. And interestingly enough, we are starting to see, at least in some location, where there may be power available, but if you add up the time to obtain a permit, the time to do your design, the time to do construction, and have the ready for service date live, you probably would have the data center that is going to be ready after power is available. So you start seeing this in certain locations across Europe where the permitting, particularly around the environmental side, is something that is extremely time-consuming.
Mm-hmm. Anybody else want to chip in on constraints? Stephanie?
Power and people. For the 55% of you who were here on Tuesday, I think the power conversation has already been tackled. But I will add something on the power side. There is an initiative at the European level, European Commission level, to move from come first, served, to ready first, served, which would be a game changer. The problem is that it's a guidance, it's not a regulation. And how many of us are stuck in a queue around Europe? You might be ready, you might have planning, you might have the capital, but hey, you've got 15 other players ahead of you who may not be ready to deploy. But as of today, that is definitely a constraint. The second piece is people, and to me, it's a full lens of people, is the people that you need to build it. Whether you're outside Milan, where everybody is, or whether you are in top of Finland, how do you get the people there? The people to operate it. It is true, we don't come with thousands of people in operation, but those skills are very sought after. So you need to get that right talent to this location. And then something that we're seeing more and more is the community and the right fit. I have the opportunity to see what's happening within our company in the US and in Europe. It's another level where we are today in terms of awareness of public, but also pushback. because of the energy consumptions and other environmental issues. So that is key to me, as well as power supply chain and everything else. But power and people will be top of mind.
Okay. Anybody else want to come in?
No, I think this last point is crucial. Before I used to spend at least 40% of my time with customers. Now I spend 40% of my time with politicians, mayors, ecologist associations, district associations, whoever association. The political and social acceptance of this industry, particularly with assets becoming bigger and bigger, people not understanding why it represents a vast portion of the nuclear plant, is a real problem. The pushback element that you were mentioning is key and much more complex, by the way, than the permitting. Throughout Europe, we operate in 23 metros in Europe. Of course, in some countries it's slightly easier, quicker, but we're talking in months, not years. The real issue is this one coming up, and it's getting always a bigger problem.
I think that adds another work stream as well to all the ones that you were talking about.
There is also a problem, I believe, for Europe, is that because the continent is smaller, actually, and most of the time we want to operate in very dense areas because the data is quite IT-centric. There is a gravity of the data. So at a certain moment, and particularly when we are talking about inferences for AI, they will have to come back to the hubs like the Paris, London, Frankfurt, Marseille of this world. So that's a conflict. That's a paradox. There is no land where the data has to go, and if countries, governments, or even the European Union do not decide for the very long term, in the coming 10, 15 years, that we have to create clusters, not just a site or a campus, but a cluster of data centers, we'll go nowhere here, particularly in Europe.
So we're talking about constraints, and so essentially what you're saying is if we had a strategy for the infrastructure, then that would speed up deployment and make it better? Is that what you're saying?
Yeah, because actually all operators, whatever the size of the investment is, we are doing, putting some dots on the map. But there is no vision on that. There is no way of supporting the efforts from the grid providers, where to allocate power globally, not just for one project, but globally, where to get the roads or the housings for people to work there. Because if you are in the middle of nowhere in the east of France, how do you get, as Stephanie was saying, the people just to work there and to maintain the data centers? Also for the heating systems, in order to recover the heat, you need networks. You have to plan that for 10 years in advance. So it cannot be done over time, I guess, only project by project. Countries, parliaments, governments have to take their responsibilities as well to plan for the future. And I think one way to find this solution is to go for clusters. By the way, the European Commission is already working on that concept in some core countries like France, Germany, and so on.
Understood. So talking to the investment side now, what kind of levers are we looking at? What can you... So let's say you want to build a data center, but this might happen or this might happen. It's so uncertain right now. How do you, over and above the financial sensitivities, how do you plan for the flexibility in the project? Does that make sense? So let's say you're building it as an AI data center, but you might use most of it as cloud. So it's a different design. So it's flexible from a level up.
As long as the cost doesn't run away from you. It's if you build for 200 kilowatt racks and liquid cooling, and then you don't manage to get a customer that needs that specification, then obviously you can downgrade in inverted commas to a hyperscaler. But the way that we look at it is the retrofit economics are hugely advantageous if you can find facilities that have very good bones. So with the floor loading that I mentioned earlier and things like that, because when you retrofit, what we've found, at least with the facilities we've started doing that to, that we save about 40 to 60% on the capex compared to a complete new build. Now, obviously, it's much more complex to retrofit a 200 megawatt old factory than it is to retrofit a 20 megawatt edge existing operational data center. So you need to take that into consideration, but there are economics that we look at and levers and things like that. But the reuse cases they vary by jurisdiction. Yep. In London, the reuse case is going to be, even just retail co-location or even content delivery network. But in the Nordics, the reuse is the ice rink. So.
Francesco?
I think the other point that is important, and I think back to the earlier discussion, it's potentially, and back to probably Tuesday discussion, is location. I think once you are in the right location and you have power, then the cost of a potential retrofit with technology that we don't know yet what they will be, because essentially, to Fabrice's point, there is a lot of uncertainty. You just can try to get the best location that you can possibly have where you have the power, and then when the change comes, have the ability to adapt at that point.
Fantastic, thank you. I hope you guys have been asking questions on Slido, because I'm going to ask Jessica, have we got questions? Yes. Could we please have the questions on screen? I'm going to pick them for you, I think. Key levers, yeah, absolutely. Okay, I'm going to go for Jack's question. When exploring new sites for data center campuses, how important is it to have engineering input when building the business case for the investment? Who would like to answer? Go.
Immediate. I mean, it's one of the first things that we do. We get the engineering team involved. We're diligencing all aspects of this site. And then also we get our electrical engineers involved on the power side as well, understanding the capability of the site in terms of, sometimes they're massively overspec'd. Can you downgrade, again, in inverted commas, the resilience of the data center in order to expand the power capacity? So engineering is absolutely integrated in developing the business plan. And then we layer in the commercial team as well to understand what is the demand for that specific jurisdiction and what sort of pricing can we get, and then we model it out from there.
If I may add...
Stephanie, then Christian.
Do you want to go first? You mentioned the jurisdiction, so I'm thinking like the Energy Efficiency Directive and countries like Netherlands and Germany where waste heat recovery is becoming basically a planning condition. And the piece that, Patrice, you've touched on, the 10 years to build a network for waste heat recovery. So the engineering input 100%, not just from our side, but very much so on the external side as well to make it work.
Can I make...
From our side, from the design and engineering side, this is a very large part of what we do, and whether it's with a developer or an investor looking to buy land, getting involved in a technical due diligence from day one is essential. But also having that conversation with the client, with the developer, with the investor to say, well, actually, you're asking us this question, but have you considered these other considerations for the land? Often if we're doing a sort of red flag review on a selection of sites to understand which ones are most viable to push forward with, a lot of the constraints are often power and so on. So, have you considered behind the meter solutions? Have you considered alternatives and so on? And obviously we've seen in Ireland recently with the Private Wire Act and so on that there is move ahead in Europe to make that private wire a lot easier. So sometimes getting the engineers in very early on opens up different solutions.
Andre, and then you, Fabrice. You were going to come in.
Oh, sorry. Yeah, I was just going to add to what Stephanie was saying. So with district heating, I mean, the dynamic in Germany is, yes, it's compulsory now to do heat offtake, but, and you build a brand new greenfield data center, but the district heating network isn't there. So you have to build the pipe to the edge of the site in anticipation of something that may occur in a decade's time, which is a little bit farcical. But I think even more farcical is in the United Kingdom, there are district heating networks. In fact, we owned a data center, and the district heating network was named after our data center, which was not plugged into the district heating network.
Oh, my goodness.
At the point of acquisition, which is... And to my understanding, there's only a handful, less than a handful, probably one finger handful of data centers in the UK connected to district heating networks. It's ridiculous. I know, Finland, all of our data centers were connected to networks.
That comes back to planning again, though.
It's completely standard behaviour. So and because when we approached the council about it, they sort of went, "Oh, we don't even know how to begin to think about answering that question." So instead, we're gonna heat a pool down the road, which is a bit of a, yeah. I personally want to do some greenhouses if anyone wants to do greenhouses.
Fabrice.
Maybe a very basic remark, but. First, you start with customers. Huh? What customers are you chasing? What split of customers? What requirements in terms of specification are they expecting? And by the way, just to mention direct liquid cooling, the American Association, ASHRAE, have still not yet confirmed what should be the norm regarding direct liquid cooling. Okay, so how do you design? But if you do not start first, and I can only say to Christian that that's, to us, that's very basic. You start first with the customer, but then with the engineering. Because until you have set the engineering, you do not know what kind of permit to apply. And then you cannot also not get the cost of construction then to make the business case. So that's a very basic circle of a decision process, and starting with the customer requirements first. And this is where we have the problem today. Because what are going to be the long-lasting customers? At what rate and at what price? For what specs? That's the $100 question.
I think at the moment, when we're using AI apps, and we are the demand, we're all using our phones, that's all going through data centers, so we are the demand. But we're not paying for it right now, are we? Somebody somewhere is paying for energy somewhere else, but we're not paying for it. So there's definitely a boom somewhere because the economics of it doesn't work out. Let's go for another question, please. Could we have the questions back on the screen? Okay, let me pick one for you. That's better. If you could change only one thing to make the DC developments better, what would it be at the moment? Who would like to answer? Go on, Stephanie.
A couple of things that come to mind. My mind goes back to the community and that acceptance, because you could have power, you could have planning, you could have everything. But to Patricia's point, I was reading actually just the other day the numbers of data center projects that have been halted because of pushback. It's 5 times what it was between 24 and 25. So the narrative around data centers, why we need them, why planning needs to be expedited, that's the thing I would focus on, data center narrative and why they're good for the future. That is one thing that needs a lot of work still in my mind.
Okay, thank you. Christian?
I think at the heart of that, the industry itself has been its worst enemy because of security around the data. The mindset, the DNA of end users and operators is that we must be secure, we must be secret, we mustn't be out there in the market. That narrative is changing, and quite rightly so. But it's led to a whole generation of people that don't understand what the cloud is. They certainly don't understand what AI is, and so all they hear is provocative headlines about, there's no power now, we can't build housing because of data centers, or that new hospital's, it's not going to be there because of data centers. The fact that hospital wouldn't work without a data center anymore is completely forgotten. So how do we, to Stephanie's point, how do we make data centers part of the community? How do we make them good citizens? And I think that's essential. We need to move forward as an industry, collaborate more, and put a social charter in place around the data center. And actually, there are so many benefits that can come from the data center if it's planned properly. Obviously, heating networks and so on, microgridding power, the use of as we're designing in San Jose at the moment, where we're reusing carbon from some hydrogen fuel cell production to increase productivity in a commercial greenhouse. There's ways of giving back and actually putting the data center at the heart of a community.
Anybody else?
I think I touched upon maybe before, but just to enhance that thing, my opinion is that if governments, the EU, and the administrations are not working in a different way with the industry, and vice versa, that's going to be very difficult, because our industry goes much quicker than the time of reaction of governments, administration, grid providers, whatever.
Yep.
So they are constantly in a race to just try to understand what's going on, and then to adapt text, norms, regulations, or rules even. In the last 3 years, the grid providers in France have changed 3 times the rules, and they are still working on modification, just because they are racing behind the industry. And I think this is not a sustainable situation. So this has to change really to get the normal adoption of what is needed by the industry and by companies in general.
I agree with you. I think regulation is just lagging. Like, there isn't very much on AI regulation at all, is there? There's the EU AI Act, but that's a completely different topic. Anybody else want to come into this question? We go back to the question list. Okay. Question for Francesco. Do data centers serve as a risk, thank you, to risk diversifying product in your real estate portfolio, or do you see it as pure play unique asset class?
It's a good question. I think I would frame it this way. Data center is potentially a material and new asset class that is coming in the world of real estate. As such, if you take real estate as a whole, you probably would think about how to diversify, and then you would consider data center as part of it. Now, your judgment will be on, is the risk-return profile adequate? And that's something that is probably very specific to each single investment and potentially to the asset class as a whole. It's a market, it's large. I think there is opportunity there. It's not easy, as Fabrice said. There is a lot of uncertainty, but there is the right opportunities there if you pay enough attention, probably.
Andre, did you want to add anything to that as well?
I mean, we look at it from a digital infrastructure context rather than a real estate context. So, which means, look, we've invested in fiber, subsea fiber, terrestrial fiber, wireless networks, not so much towers, but 5G densification. So when we look at a data center, we're also looking at the fiber connectivity. We're diversifying the routes to these sites. Where although it's not as relevant with some of the data centers we're doing, but a lot of the data center work we do, our 5G business, which is called Ontix in London, our 5G business for this ultra low latency, high bandwidth computation or whatever it is that the customers need to do, they need to be in edge data centers as well. So that's something that's forefront of mind as well. But so the data center for us is like a catalyst for a lot of the edge digital infrastructure investments that we make.
Makes sense. Thank you. Can we have the question list back up again, please? Is embodied carbon and DC construction lagging behind the progress we've seen in green power and operational efficiency? Fabrice.
I can take this one because at Digital Realty, we are committed for a long, long time of improving the carbon impact of our operations. And after having solved for a long time now the Scope 1 and Scope 2 issue, which is not the most difficult one, we are, of course, tackling the problem of the Scope 3, which is much more important and much bigger. We made a post on LinkedIn, by the way, that's a coincidence, a few days ago, that in one data center that we are currently building in Marseille, on the port of Marseille, after many efforts with our GC, so general contractor, we have obtained an incredible result of 13% carbon impact reduction, 13. I can tell you that it's really a big effort to just even reach that level. It's a combination of 20 different decisions in terms of design, in terms of concrete reuse of some steel or former concrete that we had on the spot, to go beyond that, at the time that it was very easy for me, for example, in 2014, to decide that overnight we are going to buy only green energy. Now it's a very long process, and there is, of course, on top of that, a financial element. It's costing a lot, and what I do see is that few customers, despite what they are saying or promoting on their CSR reports, are not ready to pay for that. So there's a conflict here. We continue at Digital Realty to really push for that because we believe that is also part of the social and political acceptance of our industry. But customers have to pay for that because there is a cost for that. And today, let's be honest, they don't want to pay for that.
There's always a payoff, isn't there? Does anybody else want to come in on that topic?
Can I say, not directly on the construction and the embodied carbon, but a lot of the new customer set, the neocloud customer set, are less interested in sustainability as a whole than the hyperscalers, because for years we were pushed by hyperscalers and tier one enterprises. We're declaring Scope 3 emissions and water utilization effectiveness ratios, making sure that trending towards zero, all that sort of stuff. And now with the neocloud operators, all they really care about is time to market and total cost of ownership, and then everything else is secondary, which it's fundamentally a problem when you're operating in the European Union, well, and Britain and Norway, where that is a priority for us, for all of it.
Okay, so we're coming to the end of this session. So I'm just going to go down the line. What is your primary focus over the next 18 months? Because I think that's probably where we need to focus on, next. It's a big push right now, right? So I'll start with Christian. Primary focus for the next 18 months.
For us, it's probably two things to be a little bit greedy. I think it's powered land. How do we support our clients with getting powered land? And I think it's also about flexible design solutions, so modular, different technologies. So I think that's going to be our focus.
Fabrice?
I will have to work a bit more because I'll need to find some time to talk again with all the customers and really to spend time to understand exactly where they are all going. Not in terms of what they are declaring, but what they are ready to sign for. There's sometimes a big difference.
Yeah, good one.
Yeah, I
Jessica?
agree. It's finding the right place for where the customer really wants to be, which is easier said than done.
Understood. Stephanie?
I'm going back to people. These data centers are powered by people, and we need just to spend more energy there.
Yep, perfect. Andre?
Our 18-month target is that we'll have 4 more sites in the platform and have probably completed retrofit in at least 3 or 4 of them. And then the focus will just be lease up. And to what everyone's been echoing, what everyone's been saying, it's the customer story. I think one of the votes was, is lease up going to be one of the big risks for? Is that a sign of an AI bubble? So I'll tell you in 18 months whether we've managed to lease it up or not.
Bubble or boom. Okay, put your hands together for the panel. Thank you all very much. It's been a brilliant discussion. So we're going to move on to the round tables now. So if you guys want to take your seats, because some of you are leading tables, I think. Christian for Germany, Andre for UK, Ava for Nordics, Francesco, yes. Mark, is that Mark at the end? Okay, is everybody sitting comfortably? Right, thank you. I hope you all had really good discussions. We are now going to get feedback from all of the tables. Just to get your key points, you will have 5 minutes each. Who would like to go first? Okay, I'm going to pick one. Go Fabrice, we'll go this way.
So regarding the roundtable about France, I'm not sure I can report a lot of things, but there were plenty of interest and interrogations in understanding the in-depth situation that on various aspects of construction, on permitting, on grid access, locations, where to put the investments, what is the global picture for France within Europe. So kind of more of a debate than getting some. I tried at least on the roundtable to share some facts and experience, but also to get some clarity about something which is not that clear.
Were there any topics that came up that we haven't discussed previously?
No. Mainly what we have discussed here, but more on the demand side maybe than what we have discussed previously.
Okay, and Andre? You were leading UK?
For the UK and Ireland. It was a very wide-ranging discussion, a little bit heated in parts. No, sorry, it's very nice. We explored the UK critical infrastructure designation for data centres, and there was sort of a mixed verdict around that. The DCO route sort of accelerates planning, but it centralises the power, and so it takes away some ownership and control away from local communities. So there's and then of course, Siobhan made a point about the High Court can step in and overturn decisions as well. So there's a little bit of uncertainty in the UK market. In planning and community perception is a major friction point in the UK. So lazy designs historically. We're retrofitting data centers that look pretty terrible, but we're trying to spruce them up. But then, there was the comment about some very community-conscious architecture in data center design, like the CyrusOne, specifically the Hounslow site, and you're winning planning consent with no opposition whatsoever. The skill shortage came up. And public misinformation, and it was interesting. One of the attendees linked them. So the misinformation around data centers and of course the local opposition to having a data center in their backyard. No one's making enough of a point around, data centers can create jobs. Dame Dawn Childs, for those of you who were there on Tuesday, she talked about how her 100 megawatt data center that they're building out for Pure is going to employ 3,500 FTEs over a decade. And of course, those are not low-skilled tradespeople. I mean, this is we should be upskilling people to deliver those sorts of data centers. The last couple of points. Power was the defining constraint. We had a lively discussion about SMRs. And there are 7 companies in the UK now building SMRs, and how that, and of course, and with Ireland's new policy about behind the meter, and being able to export back into the grid the same amount of power that you generate behind the meter. I think those are very topical, and whether we can bring that into the United Kingdom as well. Yeah, and I think that pretty much rounds it up. Yeah, thank you.
Thank you. Francesco.
I think we had an interesting discussion around, slightly different from what we had during the panel, how data center compared to other real estate investments. And so if you compare, say, a shopping center to a data center, what kind of factors do you need to account for when valuing what is essentially a good investment? And one interesting point that came up often was that, and the reason why I guess there is a lot of engineers in this room, is that the technical part of a data center is by far more important and prevalent in investing in this asset class, which also means that the involvement of technical due diligence and technical specific, so an analysis on the technical side must happen very, very early on when you're valuing an investment. And that's something that if you would look at building residential, building a shopping center, probably you would do as a second or a third step. And in a lot of instances, it would be not so relevant for the ultimate investment, in the sense that you can adjust and amend, and the impact that you have on your returns is somehow limited. Meanwhile, if you're looking at a data center, when you are looking at a plot, the technical specification, being that the environmental side, being that the specific size and shape of a plot may determine if you can actually, if the investment itself is viable or not. And that's possibly I think it's one of the major difference that you will see when investing, and if you decide to invest across this asset class.
Thank you. That was Southern Europe, right?
Yes.
So, and for the Nordics, Eva.
Yes, thank you. So our discussion pretty much went around people that build these facilities, the communities where the data centers are placed. The Nordics have developed as a result of power availability. The power is green. There's varied sources. Hydropower is present in big time in 3 of these 4 countries. But something that resonated with me strongly is the way the 4 countries approach almost collaboration or teamwork. They have this common approach and view the infrastructures as critical to develop their economy and to contribute to their economy. The environmental approach is somehow embedded in how they conceive life and economic development. So it's about the bigger picture. They excel at understanding the importance of the infrastructure, and we ended up the round table with a very interesting quote that says sustainability is actually just good business. So it's a market that will still keep growing for the next years. How that obsolescence of the investment over 5-year spans will impact the region is yet to be assessed. Thank you.
Thank you. And Christian for Germany and Benelux.
Yes, some interesting topics, very similar. We discussed the constraints, and obviously power came up, and powered land. In Germany, Frankfurt is obviously the main hub, one of the FLAPD European centres for data centres. And despite the emergence of more secondary cities around Germany and data centre growth, we're not really seeing significant hyperscale take-up outside of Frankfurt. And having a hyperscaler come into a particular region kind of acts almost like an anchor tenant then for other people. So what we're actually seeing is that Frankfurt itself is redefining itself to actually a 60-kilometre radius around itself, so you can still have a Frankfurt address and discover more land. So that was quite interesting. That although we're talking about the emerging hubs and secondary markets, that there's still this draw back to the traditional areas. So that was that. We also talked about the investment and the process of the investment, and the timing of the investment, and how it all works. I think the panel earlier, we spoke a lot about it. It is a complex beast, and I think it's hitting home. So people are sitting there going, "Well, actually, how does it work? You know, can you talk me through the timeline? How do I get involved? It sounds like it's a bit cyclical." So that in itself is a bit of a constraint, I think, to people getting into the market as a barrier to entry, and just trying to understand, well, what kind of yield should we be looking at? How does it work? You know, things like that. You know, what is publicly available that you can look at and talk to and understand that whether it's a deal's a good deal or not. You know, so that was some of the constraints. I think one of the other main topics that we had really was around the question of flexibility. I think everybody on the panel mentioned flexibility at some point to deal with the emergent nature of the technology moving at a different time pace to the construction industry, let alone then permitting and legislation. So some people were really sort of surprised to hear that, you know, that there's a lot of sort of need for flexible design, and how is that going to work then with the existing data center fleets that are out there? Are they going to be retrofitting? Are we going to be scaling up? Are we going to need to scale it down? How's that going to work? How do we move to vastly increase floor loading within a legacy building? You know, all of these challenges are out there. And I think from a design point of view, we can design as best as we can going forward. But the difficulty is we now need to design for as sustainable and efficient day one as possible, but you need to design for day two. And that's a trade-off. That's not an easy balance. And you're going to have to take a bit of a bet, really. And will that bet pay off or not is going to be difficult. But if you find yourself not just moving forward with something, then you're losing pace in the sort of arms race that we're in.
Absolutely. Thank you. And Mark for Asia and Middle East.
So Asia and Middle East, we mainly talked Middle East. We had a very smallish, beautifully formed table. So just looking at the Middle East, capacity. So a little bit about the ambitions of the Gulf countries in terms of data center construction. I think it's something like 6 gigawatts has either been announced or is under construction in that region. But there is huge geopolitical competition between the likes of Qatar against UAE, Saudi Arabia, as to who is going to lead within that region. If we take a look at Saudi Arabia, in terms of their ambitions, they certainly see data centers as one of the key components of their growth strategy. If we go back to the themes of the Data Center Summit at the start of the week, where we talked about sites, capital, power, Saudi Arabia's clearly got that in abundance. And if we look at the big developments, places like Khobar, and also they are shifting. I think we've seen a shift of capital from the giga projects like NEOM, which is well documented, and that shifting towards investment in data centers. A little bit of a discussion around Asia Pacific, Singapore in particular, where land is clearly at a premium. and people looking towards places like Malaysia and Thailand for siting of data centers. But again, geopolitical risks within that region. Taiwan, obviously, issues. We have China. We have many data centers in what are disaster-prone areas anyway. And with, obviously, climate change, there is that risk as well. We just touched briefly onto your point, Andre, about social value, added social value in the context of, and there's some interesting comments around that within the UK. And I think the final thing is a plug for the Women in Data Centers organisation, which my colleague over there from Kundals is a key component, key player within that. But yeah, I think that pretty much summarises what we were discussing.
Okay, I actually sat on your table for a couple of minutes, and what I'm thinking now is, can we learn from each other? Can the various areas learn from each other? And one thing I heard on your table was some creative use of Section 106 money. So I'm wondering if we can come back down the line and do a bit of showing off. What does your area do best? Talk about that 106 one. Was that the UK actually, or was it? Yeah,
It was UK. I don't think added social value is particularly high up on the agenda within the Saudi Arabia developments.
Go on.
I think what does Germany and Benelux do best? I think they've been able to stay ahead of the market, pretty remain relevant and strong. Certainly Germany through Frankfurt. Are they the premiums, the top country in Europe, or is it the UK? It depends on which month and which data centres have been finished first. This good, and then of course Belgium have been very successful in bringing in some of the big hyperscalers, and they have delivered significant capacity very successfully.
I think Amsterdam's quite interesting as well, municipality.
Yeah, absolutely.
Ava.
So the Nordics, I think, excel at providing affordable energy from sustainable sources, and not just from one, but from several. And also the public sector, the authorities' predisposition to have conversations and agree to alternative solutions or different considerations. The flexibility and the proactivity is a factor that I'd like to highlight.
And working together.
Yes, exactly that.
Fantastic. Francesco.
I think Southern Europe probably has been slightly lagging behind Germany, Benelux, and Netherlands, and the UK in terms of capacity, but they are aware of it. They are aware of the importance of data center and the data center as an infrastructure. So we are seeing more and more support by the governments, and within the context of the limitation of legislation and processes, there is support to build more and to grow this sector.
Thank you. Andre.
So the UK, I mean, London/Slough is already the second largest data center market in the world. So they've obviously, at least that's because of historical context, obviously, the marshalling yard in World War II. But I think, Britain is now, it's hard for me as an Australian to say what is Britain, sorry, it was trained out of me from a young age. But 30 years next year in the UK, love the country. I think what Britain needs to do is leverage its skill set. It's always been at the forefront. We've talked about SMRs, we've talked about turbines, we've got Rolls-Royce engines, we've got all that sort of capability. If you combine that with the data center market, I think Britain would absolutely be the number one place to host a data center in Europe.
Brilliant, thank you. Fabrice.
I believe that France has an exceptional period in front of it. Because two things. One, that we discussed at the round table. First, there is a major recovery aspect. France is just at the level of the installed megawatt that we've got currently in Netherlands. So for a quarter of the GDP, there's a problem. So that's also the reason why there is a very strong appetite for France at the moment. And on top of the fact that we've got excess of power production. We've got the same grid problems, but we've got an excess of power production. The second thing about France, which is, I believe, very interesting, that's the only country in Europe having two hubs, Paris and Marseille, being the hub number 5 and number 6, respectively, in the world in terms of data exchange. We should never forget, as we also discussed during the roundtable, that building an asset for data center is fine, but then you need to exchange data. And to do that, you need concentration of subsea cables, satellite communications, terrestrial cables, and they are not everywhere in countries in general. But in France, there is a geographic chance that France can benefit in the coming years because of that very particular situation.
Fantastic. So how do you think we can learn from each other? How do we work together to kind of use our relative and respective resources that we've got? Because it's all different for different regions, right? And bring all of that together. So what are you guys thinking? Does anybody want to take a stab?
I wanted to jump in because I was on a government roundtable yesterday about the UK, and one of the takeaways was Britain needs to learn from France specifically in terms of infrastructure deployment. So learning best practices from France. And me personally, having worked in subsea fibre for a decade, Marseille is a fantastic example, and what you guys did, Interaction Digital Realty did in Marseille, in creating effectively from scratch one of the big hubs, and it's connectivity led as well. Now, Britain could learn from France in that we do have a lot of subsea fibre landing, but no one's created a hub near any of those landing points. We tried up in Newcastle, but we didn't get any traction. So I think that would be something that we learn.
Okay, go on, Mark.
Saudi Arabia. I think perhaps what we can learn from Saudi Arabia is they are very agile when it comes to regulation, permitting, and everything else. There isn't a huge amount of legacy regulation, and they move very quickly. And certainly some of the conversations that me and my colleagues have been involved in about regulation within Saudi, they're really very flexible and adaptable and really keen to work with everyone to make sure things go really very, very smoothly. It's a sort of pleasure to work with some of their regulatory bodies like SADIA, etc.
I wonder how we get the UK and Saudi together. That would be great. We've got an awful lot of legacy regulation. Christian, from your point of view, who do you think can learn from who?
I'd go holistic on this. I think we should all be learning from each other a lot more. Back to something I said, I think on the panel about the market itself being so secretive and not willing to be open and share. Mm-hmm. That in itself is holding us all back. So the more cross-industry collaboration and sharing of information, obviously aside from things that are corporately sensitive, would really benefit everybody. I think there's enough demand out there. That's the one thing we know. So we don't really need to be fighting each other that hard to get the demand. You may have a different opinion, but I think we're holding ourselves back a little bit because we don't collaborate, because we don't talk, because we don't share innovation, because it feels like an arms race. It feels like a war on technology. But we would do better, I think, to be a little bit more collaborative.
Thank you. And Ava, do you think because the Nordics is it's got its own climate, there's a lot of different technologies going on there, but do you think the rest of the world can learn from some of those and the way they're working?
I think in terms of even better reuse of the energy, because something that I didn't mention and did come up in our discussions is how some data center operators take advantage of the wasted energy, because sometimes it's just too much being produced and it goes to waste, and how that is a very good selling point and at the same time a financial advantage to be able to interconnect better, not to let that go to waste. That's a learning point. And possibly also the repurposing, because there's a lot of land available, but remember what you said about saving 40 to 60% of capex just by reusing facilities. Certainly, there's not a lot of population concentrated, but in those places where there are industrial facilities, look at those first and see what's there to be recycled.
There's also the embodied carbon saving as well.
Sorry, Andre, what was that?
There's also an embodied carbon saving by recycling old buildings. It doesn't need to be existing data centers, but it could be old factories and things.
Mm-hmm. Perfect. Okay. Brilliant. So we're going to bring this through to a close. Let's just go down the line once more. Just have the top focus for your respective areas, please. Fabrice first.
I think I've shared it already, listening to customers, exchanging with peers from all industries.
For France.
But in France only.
Yeah.
Trying again to convince all the authorities that we need to plan long time. That's to me the first priority.
Perfect.
I think for the United Kingdom, it would be diversifying the location of data centers away from the glut of Slough and London towards areas with more abundant power, but solving some of the issues around that in terms of fiber connectivity and transmission grid issues.
And Francesco?
I think for Southern Europe is becoming even more relevant in the data center space. We are getting there, but there is a long way to it.
I think for the Nordics is making the most of these extreme conditions in terms of working better together and deploying innovation in construction across the industry.
Thank you.
I think Andre took my my answer there, but I think it's the same for Benelux and Germany, in particular Germany, with the need to diversify away from Frankfurt. It's a crazy situation. All the renewable energy in Germany is up in the north, up on the coast, but all the demand is down south, and the grid just can't get it from one to the other. So similar picture in the UK, funnily enough. So they need to diversify away from that single hub, I think.
Thank you. And last but not least, Mark?
Certainly in the context of the Middle East, I would say resilience and really taking that seriously, moving beyond redundancy and looking at resilience. And with the events of the last couple of weeks have shown that.
Brilliant. So thank you very much to the table leaders. Thank you all as well for joining into those tables. Give yourselves a round of applause. Thank you very much. So we are now actually going to move on to a fireside chat. Thank you all for your time and leading the tables. So we have a fireside chat with Wei Lin and Wei Li, sorry. That will be on till 12:30, and then afterwards we have some networking cocktail drinks in the bar just over there. So I'd like to invite Wei Li up as well, please.
Short one, and then one. Sounds good. Okay, it's lovely to be here. And my name is Wei Li. I'm the Global Chief Investment Strategist for BlackRock. And I was asked to give a bit of a broader perspective on data center and AI build-out. And I thought instead of kind of just focusing on data center, which is super fascinating, I will give a broader kind of macro backdrop on the new regime that we're in, and also where we came from and how this new regime differs from the old regime, and also what are the key investment implications of this new regime. So if I may take a step back a little bit and just kind of revisit the decade-long great moderation that we came from. So by great moderation, I'm referring to this period from the mid-80s to 2020, where we had been blessed with steadily increasing global production capacity because of demographic tailwind, because of globalization, because of China joining WTA, because of peace dividend. And because of all these factors, we had global production capacity increasing, and that is a great period for asset allocators and real estate being part of it. But generally, it's a great period because central banks were very ready to come to the rescue of economy whenever economy shows signs of slowing down, because if capacity production is increasing, then central banks tool that is really effective on the demand side of the equation is more effective in this environment. So this is why the almost 40-year of great moderation resulted in a period where actually economic volatility was not very heightened. This was also a period where equities were going up, bonds were going up, real estate is going up, because we had this period of reasonably managed macro environment that all asset classes were doing reasonably well. Now, we have entered a new regime. We have left the great moderation shaped by supply abundance, and the new regime is very much characterized by supply constraint. And this constraint, this environment is really characterized and shaped by mega forces, what we in BlackRock call the mega forces. They are AI. AI is a big part of it, but not the only part of it. There is also low carbon transition. There is also aging population, what that means for infrastructure build out, but also geopolitical fragmentation, the resilience of global supply chain being a key factor, and also the future of finance, how private market playing a bigger role in financing some of the big build out. So because of these 5 mega forces, we're really in this environment of supply constraint rather than supply abundance. And this is a different environment for asset allocators. This is a different environment for kind of economic drivers. So let me unpack that a little bit more. The 3 investment themes that we have identified as part of this new regime and also as a key consequence of AI transformation and data center build out being a large part of that is, number 1, micro is macro. Number 2, leveraging up. And number 3, diversification mirage. Let me quickly unpack that. Micro is macro. What do I mean by that? The spend on AI data centers is so big that they are actually having significant macroeconomic level consequences. So if you look at the contribution of non-residential investment to US GDP growth, is currently running at 3 times the historical average. And this year, the big hyperscalers' capex spend is expected to go up to by even 70% and more. So that number is increasing. Now, markets may at times worry about it because they worry about return on investment of this unprecedented spend. But the bottom line is, and this is how I look at it, the spend is going higher, is going up, and that actually is a vote of confidence to the viability of AI transformation rather than a loss of confidence. And it's going to take time for us to figure out if this significant amount of spend is going to be justified, because it takes time for revenues to be created after the spend. And also it takes time, if history is anything to go by, for economy-wide productivity boost to be registered. So because of that, markets may feel a little nervous because it's impatient, but the reality is that the commitment to data center spend is non-wavering, and the spend on the company basis is so big that they are having macro level implications. So that's theme 1, micro is macro. Theme 2 is very related to theme 1, leveraging up. And this is recognizing that there is a time gap between spending lots of money and the point when new revenues are created as AI is applied to sectors outside of technology and also for productivity to come through. And in order to bridge this time gap that I'm talking about, private sectors are going to have to leverage up because the public sector is already levered up a lot. If you look at the debt to GDP ratio of the US economy, it is almost twice the level compared to the pre-global financial crisis level, whereas the equivalent for the private sector non-financials has just been going sideways. So a lot of this leveraging up is going to have to happen in the private sector across equity and debt, and also across the public market and the private market. So this is the second theme, private market, private sector leveraging up. And to us is really a feature of this environment of almost unprecedented transformation rather than a bug, because we do not know if the numbers will be justified. And if markets worried about it, maybe that creates dislocations that we may want to lean into from an asset allocation perspective. The third theme is really around recognizing that this is an environment of supply constraint, and diversification may look very different in this environment compared to before, because a lot of the investment calls in different parts of the world, the previous session talked about different parts of the world, are ultimately boiling down to the same theme. Is AI going to play out in terms of creating the amount of return needed to justify the spend? So point being, in a portfolio that looks diversified, actually they may be ultimately about a handful of concentrated bets. So even a optically diversified portfolios may not be that diversified in an environment shaped by very concentrated transformations. And a concentrated portfolio is about active bet, but a diversified portfolios may well be about big active bets as well. So really rethink portfolio diversifiers in this new regime shaped by supply constraint is really, really important. You look at the last 2 weeks of market volatility, you see US government bonds not working as well as a diversifier. You look at even gold that hasn't been working as well as you would expect it to. So this is really an environment where the old diversifiers may not work as well, and this is why we think that it's more important to think about the active bets that the portfolios represent rather than wanting to spread out the risk very evenly, because the old kind of models supporting portfolio construction may not apply in this new environment. So just summing up, this is a new environment shaped by supply constraint. We have left the great moderation. And in this new environment, portfolio playbook needs to be different. It needs to recognize that micro activities are now macro. It needs to recognize that leveraging up is a feature of this environment, not necessarily a bug. And also, it needs to recognize that diversification looks different, and the old diversification may well be a mirage, and we need to think about owning active bets in portfolios. So I will pause here. I understand we have a fireside conversation. Thank you. Take a seat.
Thank you very much. Oh, sitting down, that's good. Excellent. Okay, so I was listening to you and I was quite interested in the way that you view the world. And there's this book called The Coming Wave. It's written by Mustafa Suleyman.
I have read that.
Have you?
Yes.
It's amazing.
Yes,
it's talking about containing AI and AI as a megaforce as well. So there's been lots of waves of technology that have come across, the axe, the motor car, Ford motor car. Mm-hmm. So how is this AI wave going to impact society, and what does it actually mean for real estate and capital allocation, those kind of things? How does it actually work?
Yeah, so that book is really good. I read it, and the other day I was in the bookstore, and there's another book called The Coming Storm, and I'm like, okay, it looks familiar, but it's not quite, and I realize it's a book about politics. But anyway, great book. But to your question, AI, what it means for economy, what it means for asset allocation, what it means for asset allocation towards real estate, I would say, though, similar to what I just kind of teased out in the keynote, it's going to take time for us to understand if this unprecedented amount of capex spent will pay out on the economic level. We think that it's possible. In our BlackRock Global Outlook 2026, we actually mapped out the path that the economy can take to justify this significant amount of capex spent. But a lot of things will have to go right for that to work, right? So for 150 years, the US economy has been kind of trending around 1.9% average, 2% average. We think that it's possible to break out of that to get even close to 3%, but a lot of things will have to go right. So we need to see AI being applied to sectors outside of tech. We need to see new revenues being generated as the sectors come together, tech and pharma and financial services. And we also need to see the big spenders of CapEx actually capturing a lot of the new revenues being generated. So a lot of things will have to go right, but it's possible that it can work, and we won't know the answer anytime soon. So that's point number one. Specifically about real estate allocation in our capital market assumptions, strategic asset allocation, we actually see a lot of the repricing happening already in real estate in terms of the sector adjusting for higher rates and potentially higher inflationary environment, to the extent that the forward prospects are looking quite a bit better compared to before, which is an incremental plus, I would say. But just like in other sectors, being very selective and very active is important. So we see industrials actually becoming a more favored sector, perhaps more than offices, thinking about some of the mega forces that I talked about, data center being one. This is what we're here to talk about, but also the reshoring of global supply chain, making it more resilient and creating some duplication, and that would also favor the industrial complex. So within that, being quite selective about what we like is important, and also the vintages matter as well, because the levels being locked in at the current transactions are looking quite a bit better compared to older vintages. So all of that just to say, we see the prospect looking better compared to before, because a lot of the repricing to higher rate environment has taken place. But within that, recognizing how mega forces that I talked about at the beginning are going to cut across real estate differently is important. And then lastly, just really recognize that this is a world shaped by supply, physical matters, and real estate within that looks very central.
Wow, thank you. Interesting times, right? So around that, what are you seeing as the bottlenecks and risks to investment? Obviously, we're here to talk about data centers, but if you've got anything generic that affects data centers as well?
Yeah, so as we think about the ambition for AI build out, we're talking about, like external estimates going up to $7 trillion, maybe even more by the end of this decade. It's not our own forecast, it's our review of external literature pointing to this type of range, right? So this is a huge range. And if you consider that this is the forecast by the end of this decade, then we're really talking about unprecedented pace of spending. Now, what could curtail this very ambitious and unprecedented spend? We see three potential constraints. The first is around financing, right? So we're talking about companies leveraging up in order to fund the significant amount of spending ambition. And up until, I would say, earlier this year, a lot of the funding was coming out of the operating cash flow and the free cash flow of these companies, because a lot of these companies have been just awash with cash. But we're now coming to a point where the spending ambition is now comparable with the free cash flow. So they now have to kind of think about, are they going to fund in the credit market? Are they going to fund in the equity market to support the spend, right? So that's a potential constraint, I would say financing constraint, but recognizing that the starting point matters a lot is crucial, right? Because normally when you hear, oh, things are getting levered up, is that a problem? Markets can panic about it because you need to think about, okay, the return on investment of the incremental dollar, is it going to be bigger than the cost of funding, right? So that's always a question that you need to do the calculation for. But the starting point matter, I say that because right now companies are still generating lots of free cash flow. They're still generating lots of earnings. Q4 earning for US tech, they are averaging close to 30% year-on-year growth, which is phenomenal. So they're still having huge amount of cash, which is different from where we were back in 2000, where leverage was a lot higher. Funding gap was a lot higher, but earnings were just quite a bit behind. So now earnings high, funding gap low, leverage still low is the important starting point context that we need to bear in mind as we think about leveraging up. So that's the first potential constraint. The second potential constraint may come from the physical side, right? Because yes, we talk about data center, we talk about the buildings, the real estate part of it, but energy is a key consideration too. You know, like what's happening in the Middle East also represents a potential global supply shock. It's not just about energy; it's about all the other kind of commodities that could be impacted. So we're in a world that is getting more physical, and all the ambitions that AI data center build out will likely run up against those physical constraints, talking about copper, minerals, rare earth minerals, and electricity. The fact that electricity prices is higher than average kind of CPI levels goes to show that there is pressure, right? So physical constraint may well be another constraint on top of the financing constraint that could curtail the ambition of AI build-out. And then the last piece is social economical constraint, which is really around, do people want to have data centers close to their neighborhood? What does that mean to the cost of living, and how the politics side of things could develop, and will have to kind of align to support the building and construction of all these infrastructures around it. It's another potential constraint, and that in the context of kind of elections happening is potentially also kind of asserting a pressure in terms of the ultimate scope of AI build out. So financing constraint, not binding yet because the starting point is healthy. Physical constraint, aspects of it could be binding, and the social economical constraint, which differs from country to country.
Thank you. I love listening to different answers to that question. That was brilliant. Okay, so last question is, what key indicators do you see and what trends are there to watch for investors today? And obviously we're talking about data centers, but again, macro as well is fine.
Yeah, so something that I'm paying attention to within the team, we have built out the AI dashboard to really understand the pace of innovation, the pace of patent registration. Is the delta between models really notable, or they are just kind of variations of what we have seen before? So that's one aspect of it. Another aspect of it is that as we think about companies guiding up their earnings forecast, there's a lot of kind of circular aspect to it, right? So we're talking about kind of hyperscalers buying from each other, and in so doing, pushing up guidance for earnings for each other. So there's a lot of kind of within the ecosystem, the companies liking each other's products. So I'm paying very close attention to other external validation points that I can point to that is beyond the cheerleaders talking up their excitement. So I'm looking at, are end consumers continuing to pay for new models, and are new companies, I'm not talking about tech companies, I'm talking about companies in other sectors, are they paying for new tokens? So that's another aspect within my AI dashboard that I'm paying attention to. And then the third aspect of it, and I think part of it came up in the previous discussion that I caught a glimpse of, is the price of the product in the context of, could we be heading towards excess, right? Because we're talking about companies spending and overspending in order to be at the table and be relevant in this arms race. But could it be, because individually those decisions make sense, but collectively, could this lead to excess? That's not our expectation anytime soon, but that is definitely a key indicator, because maybe the quantity makes sense, but if the prices start to fall because of excess, then the ultimate economics wouldn't add up, right? So I'm paying attention to prices of model, prices of compute, prices of token. Are they still, like going at rates that would make sense for the companies spending a lot to build them? And some model prices have already come down. So that's something to bear in mind. But the demand is going higher. So people talk about Raven's paradox, and that's something that I'm monitoring very closely to understand if the ultimate kind of multiplied output makes sense for the huge spend that is happening right now.
Thank you so much. Please put your hands together for the amazing insights. Thank you. Wei Li, thank you.
Thank you.
So now we are inviting you all to join us for networking drinks. We do have some nibbles over there. So thank you all. It's been a great day, and thanks for your attention and involvement. Thank you.